What up, everyone? Welcome to Financial Education and Business. So, I know that Hyrecar, I don't know if you noticed, they just reported their financial report August 10th, and they took their price per share, took a big impact from about $19 a share to all the way $8 and about about $9.09 a share. And the company really did drop in price, and I believe this is solely due to them missing EPS, and everything else was in line. I mean, the company they had so they reported on the 10th. As reported, they lost 36. The estimate was 246% surprise loss in EPS, and this is the biggest reason really dropped a lot. Maybe there's other reasons, but I believe it's the EPS loss and maybe some guidance. At the end of the day, the company's fundamentals did not change. Hyrecar has added more cars in this quarter. They've had more people on the platform, more demand as well, and they've partnered with multiple companies, including AmeriDrive, Park My Fleet, and another financing company who allows drivers to be able to finance cars with Hyrecar so that they can start driving cars and rent to own on Hyrecar. So I believe they've had a great quarter, and the fundamentals of the company has improved over the quarter. But at the end of the day, the analysts' expectations were not hit, and therefore the price took a big hit. And I think this is stupid, because often analysts kind of just do what the other analyst does, and they do not really make up their own mind, and they kind of just follow each other. And so that's why we have to look at this opportunity. I think there is opportunity here, opportunity here on Hyrecar to be able to buy the stock. But for me, I did buy it a while back here, around $9 a while back here, and I wrote it here, and then eventually ended up selling at $17.64 because I was seeing all this stagnation here. I sold around July 21st, and because I was seeing this stagnation here, wasn't sure what's gonna happen, I got out, and here we are back to about $9.82 a share, and I was able to buy some call options of Hyrecar at $7.18 strike price with a premium of $2.50. And this is a 2022 February call option, and I think by then, this is long enough out where the company will rebound and will do well over time. So their financial reporting I thought was really good. Revenue was 9.1 million compared to the 5.6 million which they reported in 2020. That's an increase of 62% in the same quarter of last year. Net loss, so they lost 9.3 million in earning per share of 0.45 compared to 3.8 million loss and 0.22 loss in earning per share last period at the same time. Adjusted practically operating income, it might as well be, is 7.1 million loss, and adjusted EBITDA per share was 0.36 compared to 1.7 million and 0.10 per share in the same period last year. So this year they have had bigger loss in EBITDA, over $7.1 million in operating income. And I believe this has a lot to do with marketing, a lot of the new partnerships they've done, and a lot of investment they've done in marketing, research, development. They've done especially for different ways they can start increasing their revenue on the platform with dynamic pricing. Cash equivalents. Remember, in my last financial analysis, I did talk about that Hyrecar needs to increase their cash on the balance sheet. Now they have $24.9 million as of June 30th, 2021, which is really good to see, a high cash balance so that they can do more of this kind of investments, partnerships, marketing as well. And don't forget, they're doing a lot. It's good to see a lot of cash. Since they're doing a lot of stock-based compensations, they should be able to have a lot of cash on hand ready for investments. So additional information are highlights from the Q2 report. New drivers to the platform in the second quarter were up 49% year over year. So their new drivers have really jumped. A number of rental days on the platform have gone up 44%, approximately from 231,000 to 333,000 this quarter, which is really good to see. That's a 44% increase compared to the same period last year. Commercial booking represented more than 75% of all cars rented on the platform, and cars listed for existing accounts were over 55% of the total gross cars listed. So 55% of the cars were already existing on the platform. Also, this quarter, the new CFO did join Hyrecar, and he's had really good experience with working with big firms. He worked with Amazon before. He's worked with insurance companies before. So I'm excited for him to be on the team. And the person that was there, I think I forgot his name. He really did help. I mean, he was able to get the company to where it is, and really he had a really good portfolio as well. So they talk about the revenue. So total revenue, of course, is up 62% compared with 1.9 million, but last quarter in 2020 quarter 2 they got 5.6 million, which is a really good 62% increase. The gross profit, they talk about it here. Gross profit for the second quarter of 2021 was $800,000. Adjusted for one-time expense related to claims portfolio transition to a single claim process, our gross profit margin was 24% gross profit margin. So that is decent for a growing company, but it would be nice to see a larger gross profit margin for a young company that's trying to grow really fast. That's okay. That's alright to see. So total operating expense consisted of general administration, sales and marketing. I'm sure that a lot of money went into sales and marketing. Research development expense with $10 million in the second quarter of 2021 compared to, there it is, 3.7 million in the same period. So they did spend a lot more money in expenses, in the operating expense, especially in the I think sales and marketing and research and development. And I can see how that takes a lot of money from net income. And with a lot of young companies, that is the case, where they reinvest almost all their cash into growth opportunities and partnerships. And they said this was primarily due to investments in marketing and sales to drive high top funnel volume, as well as technology and operations to continue scaling Hyrecar accelerated growth of 2021 and beyond. Once again, during the earnings call, the CEO did say that they expect by the end of 2022 to get 15,000 cars 15,000 cars on the platform, which would be amazing to see. This will increase revenue and will bring a lot of demand, and they can play and with a lot more with dynamic pricing on the platform. So the total operating expense, okay, we just looked at that. Net loss in the second quarter 2021, they had a totaled $9.3 million or $0.45 per share compared to a net loss of 3.8. So they did lose money in the second quarter of 2020, and their losses per share was a lot less. But they didn't spend as much money in the in research and development as well. They spent a lot more money this period, $10.1 million compared to the 2021 Q2, $3.7 million. So that's understandable. They're doing a lot of reinvestments. Adjusted net loss for the second quarter after excluding certain non-cash stock-based compensation, and they, like we talked about, they do a lot of stock-based compensations, which if they are doing stock-based compensations, you want to see high cash. So after excluding certain non-cash based stock-based compensation, depreciation, amortization, their net loss goes to $7.1 million or 36 per share. One thing you gotta understand, depreciation amortizations are of course accounting methods to keep track of depreciating like long-term assets, plant, equipment and land, property, plant and equipment, and to keep track of the cost over time. And they're not really actual costs, it's just the way of accounting you use. So that would bring their loss $7.1 million, and I think this is the right number to look at. So they only lost 7.1 million, which is 36 per share, which is a good number to actually use to determine how well the company did. They said a reconciliation of net loss to adjusted net loss per share is included within this press release. So cash equivalents, of course, there's a 24.9 million as of June 30th, 2021. I did listen to the company's earnings report, and it seemed really positive. They are really hoping for a great quarter over the coming Q3, and honestly I think they're gonna have a really good quarter, and I don't see why the stock would just dump the way it did. It doesn't make sense. The company's fundamentals are still fairly really good. They just missed on EPS, and I don't think that's enough incentive to devalue the company all the way down to where is it, $9.15, whatever it is at right now, right? The amount that it dropped today, which is insane. I think over the weeks people are going to notice that this is ridiculous, and that I think we're going to notice a lot of people getting back into the stock. As you can see, tomorrow is, I believe, Thursday. Tomorrow is going to be Friday. So right now Hyrecar stock is way oversold almost in every indication. On the 2 hour, on the 1 hour is oversold, on the 3 hour of course is oversold. Once again on the 1 day here is oversold. So this is the relative strength index. It tells you when a stock is oversold or overbought and all this. Right now it's at this bottom portion showing that it is oversold, and I believe this is a good opportunity to capture some of that oversold and take some shares off the market, which I did. And I think there's an opportunity even on almost a whole year and a half of call option that I've been able to pick up off the market. I've noticed this quarter that Hyrecar isn't the only company that just plummets. This is true with Hyrecar, but also if you look here, Fiverr did the same thing. We had Fiverr had a decent earning. They said, hey, Delta might impact us with everybody going back outside, people going back to school, and this company literally went from $260 to all the way $170, which is ridiculous. Does not make sense. The company's fundamentals, once again, did not change. Performance, they beat estimates by 40%, which is 5 cents per share. That is, they beat estimates, but yet still analysts are not happy with the fact that Delta could be and maybe Delta not a Delta impact, but people are going back to school for the coming semester, and as well they're going to be doing a lot of vacations. They're going to be tired of staring at the computer, all this stuff. But at the end of the day, I think once again there's good value in Fiverr. Also Hyrecar. I mean, this stock I think will have a decent opportunity in the coming at least, like I said up here, I think I commented that The price I can see January 2021 at least of $32 unless dilution or unexpected events happen, such as stupid decisions by analysts to just disregard the fundamentals and just jump to conclusions and just have a sell side come in and just drop the price. So that is my 2 cents on the stock. I think currently, not a financial advisor, but I think currently definitely is a buy in the long term. In the short term, expect volatility. It's a small company, very small company, and I think it's got a lot of room to grow, and it could be one of the top car market companies for a lot of gig jobs with a market cap of $209.68 million and a 52-week average of about $3 to $24, currently sitting at the low end of that. You have a lot of analysts saying it's a buy, and yeah, it's currently a buy. I think a number of ratings 5, and most of them are saying that it's a buy. As you can see, over the years, it's gone up $167 despite dropping all that from almost $19 to $9. Still is up 167%, which is really it's just ridiculous to just imagine how much that stock has gone up. So here we go. 3 months ago, there was no analyst saying buy, and then a month ago we have 5 analysts saying buy, and then currently after the drop and everything, what do we have? We have 4 analysts saying it's a buy and 1 analyst saying hold. So I think I'm going with the buy. And once again, if we go look at tip rank for Hyrecar, you're gonna notice that this Hyrecar. For Hyrecar, let's go look at tip ranks. We have an average price for the stock from analysts to be at the low end is $15, at the upper hand is $22. On average, it's going to be $18.75 by August of 2022. So there's definitely a potential growth for this company over the course of about a year from now, and I really do think that is true. But the market is there, so here is a 90% upside from where it is currently, and I think the market is just jumping to conclusions right now, and is underperform, jumping to conclusions and just selling the stock because of whatever the case might be. So that is my 2 cents. I hope this helped. If it did, make sure you go ahead and hit that sub and then the bell notification, and ask me any questions down there and I will get back to them. Peace.